Alrighty, let's pick up where we left off and start day 2 of this backtest. So hopefully you've watched the previous ones. We're essentially following the high level trade plan, M15 trade ideas with M1 execution. So we're taking more of that day trading approach and we're just trying to identify these entry models and really have a focus on this essentially as a backtesting exercise. So let's dive back into here and hopefully it's loaded from the last bit of price action we were within, because if you've hopefully watched the previous one, we got to around here, I believe. I think we were within a couple trades from within here, and it didn't load the price action, but it took us out of those trades. So this has pretty much brought us into the Asian session into the 16th of January for our new trading day. So let's dive into that. Quick recap of our higher time frame, 4-hour chart. So we know we've kind of come up into, without even looking at the daily time frame, we know there's going to be a daily level of supply here that we are currently within. So we know at some point, there's going to be that bearish pressure stepping in. But from our, just like I said, we'll try and keep it somewhat simple. Just focus on 3 time frames, with the 4-hour chart being our highest time frame. We haven't quite hit our refined 4-hour inside bar just yet. So there is still cause for higher prices, right? Which now looks like we are tapping into to potentially see somewhat more of a deeper pullback, right? We've had a nice internal pullback here, but it's not quite significant enough for it to be a swing pullback relative to the recent PA. So we didn't quite come down into this level here, but actually now the data's sort of changed, I think, from when we first looked at it. So you can see it here, we had the doji after that was created, right? That broke this high, pricing came back in, filled up a lot of that demand and pushed to the upside. So technically, if you follow that demand chain, the next unmitigated level of demand would be the sell to buy wicks, which essentially is what we just traded on day 1, right? Price pulling back into that larger range, but that's not something I would really draw on. So there's technically not really any 4-hour demand there. We have now broken above the high. Have we closed above that? Let's see, what's the high of that? 67.9 and the close is 67.8. So we haven't closed above it. So far we just have a wick break. But yeah, so let's dive down to the M15. Probably going to be concentrating on for shorts now that we've broken highs, right, and see if we can get a pullback play, potentially down into this demand. Okay, whether you can kind of take the larger level there or refine it to the inside bar. But so far we haven't got a candle closure. Okay, so we can't straight away say that the low is weak until we get a candle closure, but it's it's something to be wary of that we've only caused a wick break so far. We're gonna have to wait another 4 hours to see if we'll get that actual 4-hour IBOS or not. Jumping down to the old M15, we have not had a break. Has that closed yet? Or 1 minute to close? Let's see. If we fast forward this a little bit and we get the candle closure. So now we have had our M15 swing break of structure. Remember, first thing we always do is focus on structure. We want to know what is the current swing range we are within. If we have an M15 boss, okay, so let's put on our swing circle here. We now must have a new swing low. Where's the swing low? We can draw it from where the swing high was to where it was broken, drag it down. It's the lowest point in this box, right? Pretty obvious one in this case. So we can put our pretty circle there and we can just move this one along. So this becomes our new swing range that we are working within. Now something you'll see me do is with my charts, just to clean things up a little bit, is if you've got a massive zone like this, and obviously now price has moved into it, moved away, sometimes I'll just refine it to there just to make my charts just a little bit easier, just in case you ever wonder why I've drawn it from the body. It's just because, with the benefit of hindsight, I can now see that price has moved in. So just tidying up. Anyway, not really that relevant. So swing break of structure, we'll have to start thinking about that the M15 swing pullback could kick in at any moment. We're now tapping into 4-hour supply. So I don't really want to be buying these highs, right? This is not the time to really be thinking about aggressively following bullish order flow after breaks of structure. It's also, if you look at the time, 2 a.m., so pretty much the heart of the Asian session right now. So like I said, I'm going to typically kind of focus on the European and New York sessions. So let's go to split screen with M1 and M15. But remember, don't be sitting on your execution time frame. So I'm going to lead by example here, and let's just focus on the M15. So we have structure. We know what swing range we're within. Let's look at potential POI. So we have this much bigger 4-hour demand range. So just to keep our charts clear, we're aware of it. Again, I'll show you on the 4-hour chart. We are aware it is here, right? Big candle, but I'm just going to hide it from the M15 chart, just to make our charts a little bit clearer when we were analyzing, okay? So we have the extreme here that's mitigated. So if we follow along, what's our next POI? Kind of always start from the bottom on the bullish, because if you kind of want to focus on where the high probability POIs, what's the big filter that we know? The ones that are most well priced near the swing lower, or generally going to be the higher probable move if that trend is going to continue. So we have this nice mitigation of a previous level. Okay, so that's a decent tick in the box for why this would be a high probability POI. It also eventually led to a swing boss. As you can also see, it's a flip zone. Okay, so remember what I said about flip zones, because obviously it can be hard to train your eyes at first, but what's the first thing you do when you identify a zone? You identify the pivot. Okay, we can see there was a pivot. The next candle closes above its high, so we know that's a valid demand zone. Did it lead to a break of structure? Yes, it broke that high, and we can see it broke the swing high as well. Okay, so we know it's an institutional zone because it led to a break of structure. Tick one. Next thing we can ask, is it a flip zone? Well, how do we define that? Well, look at the start of the reaction point of where the pullback started for the zone, right? The start of the pivot. It's all the way up here. Look left, did we react from an unmitigated zone? Yes, we did, right? Clear supplies, and it led to a break of structure. So this makes it a flip zone because prices come into supply, right? It's failed to make a lower low, and demand has stepped into the market. So anywhere from the top of this reaction to the bottom of the reaction, that whole blue box is technically your supply to demand flip range, but obviously that's a massive zone. We want to refine that a bit more, right? So whenever you get a big reaction like that, leg like that, this is where if you ever hear me say the extreme of the reaction leg, that's what I'm talking about here, okay? The extreme of the reaction leg that broke structure, this is that POI. Now, next question you can ask, is it a sweep flip? Did it sweep liquidity? And this one's a little bit subjective in terms of whether it's near enough for you to deem it. So you can see this caused a fractal high, so that's a fractal low that then gets broken, right? So arguably, well, we know there's definitely going to be sell-side liquidity below that low. It's just whether it's near enough to the flip. But if you're super mechanical, I would say it is. I just prefer it to be a little bit nearer to where it's actually taken. So typically, like, it would come in, grab the liquidity, and then that would be the move. But we kind of go a little bit further, but it's still there, right? So arguably that's a flip, that's flip liquidity, and we also have some nice inducement in front of it. Okay, so before I even draw on the rest of the POI, I already know this is pretty much the highest probable POI there is, because let's quickly recap it. It led to a break of structure. It flipped another zone. It swept liquidity in the formation of it. It has inducement. If we do premium and discount, it's obviously within the discount of that swing range. It had a previous mitigation, right, from this one. So we're following the order flow, we're following the money. That was that last injection of demand, right? So this pretty much ticks nearly every single box. I would be a bit wary that we do have this massive wick right at the strong extreme. So I'd be wary of that. But for the most part, because we've already had a reaction from the edge of that zone, the top of the pivot, this would be the main what I'd concentrate on. Now, if we come down, right, and whatever, and then we come lower, okay, fine, then I'll just do this, right? I'll refine my zone, draw it over here, and then we can look for a bit more confirmation, right? We could maybe wait for an M15 chock or IBOS to create you new demand, just to give you a bit more confirmation that there is enough demand from within here, right, and then we can go. Now, you don't have to wait for that on the M15. Some of you may just want to jump in on the M1 straight away. That's cool, that's up to you, but for the most part, especially when you're starting out, I recommend that you concentrate on basically full like candle body zones, like full on mitigated pivot zones like this, like single candle bodies where they're fresh. That's what I recommend you focus on for the most part, because they're generally going to be the highest probability. Why? Well, they should contain enough orders to at least give you a tradable reaction, so they're going to be the safest zones to concentrate on. Okay, so that, if you're wondering what is the art of POI selection, picking high probability zones, this pretty much ticks everything in the box. It's also nested within a 4-hour zone as well, right? So very, very decent zone. Next, only really other zone that we have to look at, so mitigated, is this level here, right? Because there's nothing else. You've got this level here, it's already mitigated, right? So I wouldn't be bothered about that. This would be this level here, this inside bar. Okay. So is this zone well priced? Well, we know it led to a break of structure, right? So it's definitely a zone. Is it well priced? Roughly around the EQ, so it's not bad. Led to a break of structure. I mean, arguably it flipped the supply in here, right? That supply caused a break of that low, so we've come in, reacted, but it's not the cleanest. It did sweep liquidity below these lows here, right? Again, not the best. It just caused a little wick break of there, so not great, but there's something within there. But it doesn't have any inducement in the leg, right? Just a straight push. There's no structural liquidity there. There's no low in the leg. And you can see the way here, it's just like that's Asian session price action or towards in New York, low corrective price action with that double bottom. That whenever you see that, especially when it's in front of like an obvious POI below, more often than not, that's just, that's going to get smashed. Now, when it comes back, it might provide a tradable reaction that you may want to trade, but I wouldn't be necessarily getting in long here and just holding your full volume thinking we have to make a swing higher high here. Like when you've got obvious equals like that in front of the POI here, it's looking prime for that sell side liquidity to get taken. So yeah, if you can bother to remember, sometimes I do that to tell me that's like available liquidity sitting there. Now that doesn't mean that it will definitely be used. It's just a pretty good likely scenario. Okay, so really there's only two POIs here in M15 that I'd be that interested in for looking for longs, if we pull back. So now immediate bias, we've broken structure, start to think about pullbacks, we're coming into 4-hour supply, but nothing to do just yet, because what do we need? We need an M15 POI. Now what you can do actually is scroll back, of course, if it will let me. I'm not sure if it will. Should do. I haven't done this yet on FXReplay. See if we can find some more POIs. There we go. Will it load? Will it load? And we can look within here. We'll just take a nearby one for now and come back and look. There'll be an M15 POI that potentially we may tap into. Okay, so let's see if it comes up, because I'll just show you the trade plan in a minute. But when price enters a 4-hour POI, if you're following, the day trading plan, let's say, you don't just want to jump to your execution time frame straight away. Sorry, this is really long, dragging it away. Because remember, it's M15 trade ideas, M15 POIs, lower time frame execution. Okay, so if price comes into here, yes, you're within 4-hour supply, and we could go from here. But if you jump in on an M1, entry model, as soon as we tap into 4-hour supply, you're likely going to take a ton of losses before we go. So that's why the plan is wait for your M15 POI to be hit. Okay, so this would be this point here. This is where we are within the plan now, if you were looking to get short. So you're within the higher time frame POI, but we haven't quite yet hit the refined M15 POI within it. So it's up to you whether you want to jump in and look for an M1 entry model as soon as we hit that, or whether you want to wait for a bit more. And that's what I talk about here. Okay, so at least wait for that medium time frame POI mitigation before looking for the lower time frame entry model. But that doesn't mean you have to jump in straight away, because if you're shorting here, you are counter. Everything's bullish basically, apart from then the M1, right? So this is why I'm saying for the most part, we recommend you wait for at least your medium time frame chock or IBOS. So that would basically, what that means is wait for an M15 chock or an M15 IBOS, right? Because then at least you see some structure shifting in your favor, fresh M15 POI to trade from. This would be a better example, right? We get a clear sort of obvious IBOS, and then you're coming in, right? Then you've got a lot more on your side. It's going to be a lot more higher probability trading against the swing trend if you at least wait for this, okay? So that's why the latter is recommended when you're trading counter trend and counter order flow. Don't just jump in on the M1 straight away in an old zone, right? Wait for at least some structure to shift and give you fresh M15 supply to trade from. So let's put this forward and see what happens. Okay, so at least let's do this. I think I'll do this. I should do an M15 candle. So I'm still getting used to software. So that would be your M15 fractal low, right? So let's say we wait for, let's just be aggressive, right? And we'll just look for kind of every sort of, let's say valid M1 entry model that occurs. So we'll either wait for price to get into here, and then we'll look for our M1 entry model, or what do we wait for? We wait for the M15 chock. What will that give us? That will give us a fresh M15 supply that caused it, and then we can look for price to come into here, okay? So let's put this forward and see what develops. Okay, so now we've got the chock. So M15 supply that caused the bearish change of character after a boss. So let's take a step back for 1 second. When we have a boss, we expect a pullback. Is a chock a signal of a swing pullback? Not necessarily. It's the first sign that structure may be shifting, and we may be getting that. But really, the strongest confirmation we get is an IBOS, right? When you get much more of a significant low that breaks. Because what could easily happen is we could just get a chock, we could get a bit of a pullback, then we go up here, right? And you're shorting from just a high that caused a fractal break. Whereas then if we came into here and then we got that, you see how that would be like your IBOS. And that's a lot more significant, because this high has broken a much more significant piece of structure, right? Rather than just this. So especially when there's been like, no liquidation, it's literally just a chock. You want to be a little bit more wary of these. These are a bit more low probabilities to be shorting from, or at least wait to see if it's respected a bit more and see if it starts to build that bearish order flow, right? But we do now have an M15 POI, so let's do split screen and see what develops. But again, what's the time? So we're in the middle of Asian session as well. So I did say I would concentrate on the sort of more London session and New York sessions. When trading on the M1, there's a lot higher probability because volume is going to be a lot higher. And yeah, so let's just fast forward this a little bit and see if we can get a bit more. Okay, so we started to see kind of a bit of bearish order flow hold. We did have this POI within here. I don't think it was an entry anyway. We just kind of, we popped in and just fell down. There's nothing there. So we've got another POI here. See if I can copy this across. All right, so at least you're starting to see supply hold a little bit, but this still is not the best because all we've had is a chalk. This POI has not flipped anything, right? If we looked left from where it reacted from, didn't react from anything. So it's just a zone that broke a fractal low, essentially. There's no inducement in the leg, right? Just a straight push. Did it sweep liquidity? Yes, it did, because it's a very, very, very subtle one. You see how we have the pullback. The inside bar failed to break the previous candle's low, which means that was a pullback. Then we've come down, then we've swept that high, and then we've moved to downside. So we have a sweep zone. So far, there is no inducement. Let's just play this forward a little bit. Okay, that looks a lot better now, right? We've actually got some momentum coming in. Right, it's quite a sharp, right? We've come into 4-hour supply and then a V-shape down. Okay, so that's looking a lot better. Again, no inducement in the leg. So let's do this here. Okay, let's keep an eye on this. Okay, so now our alert would go off, right? If you set your alert on the M15 POI, no inducement in the leg. So what do we need? We need to see there's no liquidity to the left. We need liquidity to be built to the right. Nothing's going so far. We're just moving to the upside. So let's play this forward. Okay, this high has now broken a low. So this may entice early participants into the market who potentially want to short that high or buy the breakout of it. So what is that going to do? It's going to generate sell side liquidity behind that high. Okay, so now we're building that liquidity to the right. Okay, so hopefully it's becoming a very common pattern now of what we wait for. Of course, price could easily just tap into here and fall, but we want to be systematic and follow our framework, not what if. We want to be doing if then, right? Cool. So move down, a lot of momentum. Gonna pull back, coming in, and then boom. Right, so anyone who's just trading M15 POIs with an M1 chalk, smashed, stopped out now. Okay, so now we have a strong liquidation. This would be the demand, right? That caused the break of the high. So ideally, we want to see this go to show us kind of that order flow is definitely, supply is regaining control. We haven't quite hit our refined level within the zone, but it doesn't really matter. That's just an added confidence. So let's see. Okay, smashed through that, so that's nice. Oops, didn't mean that. So what do we have? Let me just draw this on and I'll talk through it. We have strong liquidation, right? So this is our fake break. So if we go to the entry models, we flip it upside down because I haven't drawn the short versions yet, but hopefully I'll try and get that done for you. So we had no inducement in the leg, right? It was a straight push. So when we come back, what do we wait for? This is the fake break. Where is it? It's upside down, so I get confused. Here we are. So this is the fake break. This is the one we're looking at, okay? So we had a high that broke structure. We wait for that high to get liquidated. We look for the demand that caused the liquidation because we want to see that fail, okay? Some of you might not want to. You might want to just, as soon as you get the liquidation, you might want to enter in an M1 chalk up here, okay? This is like what I've found to be the most ideal, is you wait for the demand to fail. Ideally, then you can, if you see there's a flip that took out the demand, then you can enter in the flip, regardless of whether it sweeps or not, okay? This is one option. Some of you might still want that to sweep, right? It's up to you, but this is what I'm looking for, okay? And then we can either get involved. If there's no flip, then what do you do? There's only one place to take, right? You take the extreme. So that meets this criteria, right? We have a high that broke the low, so strong liquidation there. That's the demand, right? That caused it, the nearest demand. That has now failed. We have the M1 chalk as well, so we've even got the fractal structure shifting back in our favor. There was no flip, right? This doesn't react from anything. So all you have here is the extreme, okay? So that for me is a valid M1 entry model. Now, what I will say is, this is where it gets a bit tricky. Again, I'm trying to point out how to make things as mechanical as possible, but then where there is some room for, subjectivity. And the question for me is, how strong is this high? Because what has it achieved? Well, it's just achieved the break of a fractal low. You kind of look at the larger price action, it's kind of just like this. And it's like, well, did this high really break a lot? Because kind of that M1 order flow has just been bullish, right? We've just had a pullback. So this is where it depends on how strict and mechanical you want to be, and how much you love the POI. And what I mean by that is, you know, it would be a lot better if you kind of had a clear M1 pullback like that, then we come up, and then if we broke that low, I'd have a lot more confidence about this high. But when it's kind of just, you know, one up movement, one down movement, one up movement, it's a bit iffy, right? Because all we've broken is a fractal low there. But if you want to be like, I guess, bare minimum aggressive, then this would meet the minimum criteria because it did break a low, okay? So that's kind of where sometimes you may want to decide, like if you're in doubts about the higher time frame area and the higher time frame POI, and you only see that, you know, maybe we've only just tapped the zone, there's a lot higher up. They're the things that you may want to take into trading. But unfortunately, this is where then you can get analysis paralysis, right? Because there can be a lot of variables. But hopefully, this is where the backtesting exercise comes in great, because this is where we can just collect data and it will come with time and experience of what you want to see, okay? Not what I tell you should see. I'm giving you the framework. Now you, over time, will have to build, hopefully I'm making it clear, right? It's going to be individual to each trader. But this is looking good, right? A lot of momentum. We've now broken this low as well, which gives me a lot more confidence, because you can actually see that pullback, at least from an M1's perspective, looks like it's now finishing, right? So that's a lot better. This now becomes a much stronger high in terms of M1. So yeah, let's put our entry order on that, which I forgot to do. Okay, stop a few pips behind there. Micro pips, I should say. Now, this is counter trend, so just going to target 5R. Obviously, you don't have to do this. This is just to keep it nice and simple for what we're doing here, but obviously there's a lot more room, right? If we are going to get that pullback to target lower, but I'm just going to be consistent with the 5R. Click on that, place the order 1%. Is that 5.9? Looks about right. Okay, cool. And we're in. So yeah, let's see. Pips forward. It's going to put us back. Nice reaction. So nothing to do, either get stopped out and then we can reassess, or we wait for the low of the pullback that tagged us in to break before we can trail to break even. So just be patient, don't do anything dumb, don't get emotional, don't look at your P&L, just let your alerts go off. Alert goes off, happy days, now we can trail to break even. What time was that actually? Okay, that was around 6 a.m. So that's an hour before Frankfurt opened. So I wouldn't usually be at my desk looking to take positions at this time. So for me, session timing is it's pretty key, but it's not a super strict rule for me. If price sets up in a high probability POI and price action is great, it's valid for me to take. Obviously, if I'm prepared, I don't have to be rolling up to my desk and quickly seeing an entry and jumping in, because more often than not, I'm getting firm and I'm making a mistake. Okay, but this would be the type of trade. But like if I was at my desk, or some of you, you can be at your desk and trading this time. This is when it, in my opinion, it makes sense to kind of take those sort of Asian session entries when it's in a high probable area. There's high risk to reward to target down here. There's a lot of momentum, right? It's not super corrective, and it's not super impulsive. But usually Asian session is kind of like this. Right, there's not really anything going on. Whereas this is like, it's in a high value area. We've got bearish order flow, supply is being respected, a lot of momentum. It's very clean on the M1. Like this is nice price action. That's typically what you'd see during London, right? And that's when it can make sense to take those entries a little bit earlier. Cool. So let's see. Okay, nice 5R. So that's a good example of a counter trend trade. So now reassess. What do we have? We have another M15 POI. So let's see if price pulls back. We can look for another bearish short there following that internal order flow. Otherwise, just wait for price to come down to our level down here. So I'm just going to zoom out a little bit. We can fast forward this until we get to either one. So Frankfurt open now. Okay, that's a strong reaction. Okay, so if we actually look at this, right, sometimes what you'll see is you'll have your refined pivot POI, and then you'll see like a strong reaction come in nearby. And then this is sometimes where I'll reassess and go, well, are we maybe rejecting the range, right? You have the sell to buy range. Does that make sense? Well, yeah, we had a supply here. So that is where potentially price has reacted from this supply, right? We get a reaction, we push down, and then we push up. So the question becomes, is this now going to be where you want to trade from, or do you always want to stick to single candle pivot POIs within your trade plan? Okay, this one's quite small, it's not massively bigger, so if you start to get strong reactions, you can. What you have to be wary though of if you do this is that your range is now bigger, and sometimes you can get full signals before price actually pushes into the refined POI, right, the single candle pivot POI. So you may want to be a bit more cautious with what you see on the initial first mitigation. Okay, so let's pretend we want to trade this, or look to trade this. There's no inducement in the leg. And again, be wary of those equals behind. But if there's no inducement in the leg, what do we need? We need to see inducement built and taken to the right. we have a shock to the upside with momentum. Was there any liquidation? We have these equals, relatively equals. You know, arguably the liquidity was taken there. It's a bit far away. But then what caused the liquidation of those lows? So kind of let's take this slowly so I can see a fair bit going on here. We have equal lows here. Okay, the supply that caused that liquidation would be here, and that's, you see how that held. So now, when that's held and they've made a lower low, that liquidity has not been used to create a move to the upside. So what we need to see in that instance is new liquidity built and swept, right? So that's where I just be like, right, that's gone. So let's look for new liquidity. We get a break of this M1 fractal high here. Okay, so now you have a low that broke a high. That low has now been swept. Okay. So, you know, let's assume, right, that because that low managed to achieve at least something, we can assume there's a bit more liquidity than normal behind a low, right, that's now been taken. The supply that caused that liquidation, let's say is here, right, that's the nearest level. That has now clearly been broken to the upside. So on paper, this now meets the rules, right? You have higher time frame or your medium time frame mitigation and 15 POI, no liquidity to the left, so we needed to see it built to the right. We have a low that broke a high, that then got liquidated into the mitigation, nice momentum to the upside, and we have the demand that caused that supply to fail. Okay, so a couple of things you have to be cautious of is, like I said, you're trading a range POI rather than the pivot. So sometimes that first mitigation isn't going to work. This is also a big candle, which I'm never a big fan of. It's kind of weird. I don't really have anecdotal evidence for this, but when you get massive candles relative to recent price action, I just see them fail a lot for entries a lot. So I don't really like to trade directly from them, and I prefer to either see price come in and kind of give you that confirmation entry from it, or like, you know, wait for another boss and then look for price to come in again. Because otherwise, you know, your risk reward isn't on your side as well. The other thing is, this is kind of what I was saying about up here, right? It just caused a shock. It never really caused order flow to shift, right? You see how, like, so it's like how, you know, how much did this induce early participants into the market, and it only broke that? Similar question to here, right? When we said it only broke that low. So this is where it's a bit iffy. And it's going to depend on how much you like the overall setup and how much you like the POI. Because at this moment, that high only broke that. So it's like, really, how significant was this high? You know, it's a bit debatable, right? But this meets the rules. We were consistent with the other one, so let's take this one, right? So some of you may want to, you know, with the big candle, you may want to enter in here to refine your POI. But let's see, can we even get 10R with this to the high? Because this is pro trend, right? That's what I mean. Even the risk reward is terrible with this. So let's enter within it a little bit, just so we can try and get at least 10R to the high, so we can be consistent with our management. Roughly there. Okay. But I like it, right? I like the fact that it's actually broken the high. It's just the liquidation is what I don't like, because that high is not really a lot. But yeah, let's see. So place order. Is that placed it? Yeah, that's cool. Straight out. Okay. Not too surprising, right? I mean, these just look so juicy, like they're going to get smashed, right? But yeah, but hopefully you guys can see that. This is a really good lesson where it meets it on paper. And this is still going to depend on you as a trader of, like, you know, reading between the lines a little bit. And it's like, how significant was that break to make this a significant low, to make that a worthy liquidation? Whereas now, what do we have? Now we have, you know, a much clearer break of a high. Right, that to me would induce a lot more buyers into the market, i.e. me, right? We just took that. So now this would be a much more of a liquidation that I'd be interested in, okay? Seeing this, low get liquidated. So what caused the liquidation? Nearest level of supply would be here, right? This level here. We're now pushing deeper into, have we hit the refined pivot yet? Nice, okay? So this is where, like, if you're just patient and you want to be a bit higher probability and wait for your single candle pivot zone to be here, then you wouldn't be looking at any of this. Especially, again, when we know there's a high probability POI below. Really, whenever you see straight pushes like this, a lot of the times these will fail, especially when there's on stuff below and it left those equals, okay? So this is where that will come with experience, when you'll know you just want to wait for it. You want to be a lot more patient with POIs like this. So we've come in, come down. Okay, so we've got a shock to the upside because we took that low, that then became the high, and now we've got it. But you see the supply that caused the liquidation, which I've drawn. See how that's not failed? So what I'd want to see is that go, and then we look at that, right? Because that would be the demand that causes it after the liquidation of that strong low. So let's see if we get that, and we just push down. So now that supply has done its job, it's made a lower low, I'd need to see more liquidity built and swept again, okay? That's where you just got to be patient now. So now you want to see something like that high go, enticing early buyers, liquidate at the high, then the break of the supply that caused the liquidation, if it was say here, and then let to get involved. That's what I need to see, right? You need to see the liquidity model again. So if the liquidation happens, and then it's used and nothing occurs, you need to reset and wait for it again, not just keep looking for the next M1 shock. Oops, okay. And then we dump. Okay, so I think that was a loss there. Definitely a valid loss if you have range POIs within your plan. There was a strong liquidation on paper. It's just a question mark of when you have just a little tiny, barely a fractal high there, and it's like, has anything really been broken in that instance? It's like, what did this low achieve? Didn't really achieve anything. Whereas when you get this low, okay, now that's really going to entice traders into the market. That low then goes. Right? If we then had taken out the supply that caused that liquidation, that, in my opinion, would be a much higher probability trade, even though I still really don't like this POI. Like, again, when you see these straight pushes, you want to be very, very skeptical of these POIs. They very rarely work out. Okay, cool. So now we're coming into the POI that we like. This move's obviously getting a lot more of extended, but momentum is very, very strong, which is making me a bit wary, because if we look at the 4-hour chart, this is where you want to, the higher time frame, although, you might not be thinking use it that much with your immediate bias. Where are we? We're coming off that 4-hour supply. Yeah, we failed to close above that. So we now, potentially just have a wick break, and that could end up turning into a sweep, right? Because if price was to break this low, then you then would have a sweep supply POI. Let's see. That inside bar is broken, so you now have a 4-hour bearish chock. So it's starting to look like some bearish pressures coming in, but I wouldn't really be too convinced of that until this low goes, right? Because this could easily just be like this. Yes, it's potentially a weak low. It didn't cause a candle body break, but we could do that and just push up higher. But the fact that we mitigated for our supply, potentially swept that high, we've now got a bearish chock. Technically, you now have valid for our supply up here, right? So this is where it's getting a little bit messy. And it's a bit, you can start to see how you can build now a case for bulls and bears, and that's where trading can get a bit tricky now, and we can potentially see a bit of a range. But M15, just open this up. We have a nice still bullish range. Right, this would be our week swing high. We're now coming into our mitigated extreme. We have some nice inducement. The other thing that's a bit subjective about inducement, like I said, right, is how near it is to your POI. So the way in which we can try and be mechanical, remember, is if we draw across where the liquidity is, right, that low, and then you want to see, just like we normally do, the supply that causes that liquidation to get, we want to look at the interaction of that, right? And that's the way that I can, so far, that's the only sort of mechanical solution I've found to decide whether or not you're happy with it. Because otherwise what I was used to sort of looking at is go, well, there's inducement here. And so as soon as we come down, we can just look at M1 chock, right, without kind of anything decent here. But really what you want to see is price come in, or let's say there's like an M1 supply here, and then you want to see that go, right? And then at least now you've seen the supply that caused liquidation get done, and then we can look to get involved. Because that way, it brings the subjectiveness out of it, of how near that is to here. So if we look at the M1, let's see how we develop. Okay, so that would be like the sweep, but we haven't come into our POI, so no trade. Unless you want to trade the sweep, but not really that interested in that. Okay, so now our alert would go off. So we have inducement, but like I said, for me to use that inducement, really what I want to see is what caused the liquidation. Well, the move broke it here, so it's going to be something up here, right? So really I want to see that go. If I'm going to jump in using this low as a liquidation, that's what's going to have to go. And it hasn't. So what I want to see down here now is liquidity built within the POI. Okay. So this is kind of like this version, right? Because we've got a chock here. So now arguably this low is a strong low, or at least a significant low because it's broken some structure. So if this low gets taken, then we can say there's a strong liquidation. But the question is how convincing of a break is that? Has that induced enough buyers into the market, or I should say, enough market? Has it induced enough market participants to generate enough sell-side liquidity for BFIs to buy against? Because really, if you get rid of that and you just look at PA, what's happened? Have we really broken much? Like we've just come in, we've come up, we've come down, we've come up, and we've come down. Like has bearish order flow really shifted? Has supply here really failed? Well, technically we've had that bullish shock, right? But it's like, has it? Has it really? So that's kind of like a question mark here. And that's going to depend on how aggressive you want to be, how much you like the POI, and the overall story. We're starting off with a lot of momentum from 4-hour supply. We've had a 4-hour bearish shock. You might want to be a bit more patient here, maybe you want to be mechanical. But like I said, let's be aggressive. Let's just take every sort of, minimum valid entry. So if we get a liquidation of this low, and then we get the supply that caused liquidation to flip, let's look at the entry, right? Okay, so we get a liquidation of the low. What caused the liquidation? This is our nearest level of supply. So let's see what happens with that. Okay, so see how here there's a bullish shock. So potentially you might be looking at an entry, but what's caused the liquidation hasn't gone yet, right? So that's where, potentially you want to see that go. That's what I'm saying. These are the most ideal setups I found is when you wait for that. So let's see, it holds, and then we go, right? So then you avoid a potential loss there. So that liquidity has now been used. So again, what do we need? We need more liquidity to build and swept. This is getting a little bit messy now, but you've got kind of these relative equal lows. And the thing is, the deeper we come into the POI, right? This is kind of the last level that has to hold. Potentially, the more aggressive you want to be with the entry model, right? Because if you get in on the first mitigation, there's always potential we can push in a lot deeper. This low obviously broke some structure here. So yeah, we can count that as a strong liquidation. So what caused a liquidation of that low? That's the clearer supply, right? Let's see. Yeah, it doesn't look like that's going to be used. There's a lot of momentum coming in now. So this is where, okay, you could have the most basic entry model and just go, I don't know exactly, let's see. Broke the low, so that would be around one chock. Okay, and you could go, right, I love this POI now, or not love it, but like, this is really the only POI that's going to hold if we're going to continue to the upside, unless we come into this wick. We've literally mitigated the very, very extreme of it. Big V-shaped reaction. Okay, I'm just willing to get involved now, right? There's probably liquidation here. You want to be a bit more like, okay, do you know what I mean? I don't know if I explain myself very well here, but this is where it's the last level and last sort of line in the sand, whatever the phrase is, and you may just want to get involved. And this is what I mean about the higher probably see the POI and the area, the more aggressive you can be with your entry model. Because if this fails, well then this whole POI is failing, and we're probably going to take out this low, or maybe something will develop from this wick. So this is where you may want to be a bit more, let's say risky. So let's target 10R. Still within the London session, which is good. Place order. Okay, cool. So just within the supply that caused that liquidation. Okay, so a lot of momentum now, doesn't look like we're coming back. And that's the supply that caused liquidation. That's now being flipped. So we can potentially enter on that, right? So this is, go back to the entry models. We'll flip it back. Alt-I. So no inducement in the POI, right? And we have a fake break. So break of the high, generate some liquidity. What's the supply that caused the liquidation here? Has that failed? And we can enter on the flip if it doesn't sweep because we've already had the liquidation there. So if we go back here, right, that's the low that broke this high. That gets liquidated. Where's the supply that caused the liquidation? We trail back up to there. There's the supply. So when price comes up and flips it, we don't need it to sweep, right? Or at least if we're using that entry model, we don't need to. So what we can do is set an entry limit on that. Let's see. Okay. Yeah, it's only a few pips, right? So this is where especially the last, let's say from sort of February, March, I think, of 2022, started getting a ton of no tags from just always over refining like this. If I refine to here, how big is that? It's about a pip and a half. was getting a lot of no tags, right? So when you get a range that's quite small in one like this, it's literally just a sell before the buy candle. And you're entering where? You're entering at, like I keep saying, this is like the last line in the sand, and you've got all this risk reward to the high. Don't over refine. But again, I'm going to be consistent. You could target way higher. Let's just target 10. See if we can get that. Okay, I'll leave this order on. I just want to move out of the way a bit. Let's see. I don't think I set the trade, did I? Thing is, you probably wouldn't get tagged in that in real life, I know, depending on your spreads and how tight you were. Let's set it in case we come back in, because we could mitigate that range. That's not really flipped anything, so I wouldn't be looking at that. It could just be inducement for our POI. Nah. Yeah, that's gone. Okay, not to worry. So yeah, definitely going to cancel this order now. That's frustrating. But yeah, so we got those two levels. Hopefully that makes sense for the trade, right? You look for where the liquidation was, look for where that interaction is, and it just taps the range. So yeah, probably wouldn't have got tagged in reality anyway, depending on how tight you put that. That for me is not really an entry. We haven't really flipped anything unmitigated there. It's just a continuation. I wouldn't be that aggressive. This is where I'd be looking for price to come deeper into there. Is what it is. And then yeah, nothing really until kind of this M15 POI up here now is buy to sell. Not a great POI at all. No inducement in the leg. Arguably flipped this range here. You kind of refine it to the next candle that closes below. It just makes it into a massive POI then. So I just leave it there. We're coming to the end of the session now. So let's just see if anything happens. Yeah, just in the middle of no man's land. Okay, that brings us to the end of London, so I'll pause this here and then we'll do New York in the next one. But let's do a quick recap. So start the session, Asia session, we broke the M15 high. We came into 4-hour supply, so now we know there's a very decent probability that we could be getting the larger 4-hour pullback, right? Because this is our 4-hour low down here. So when we get that, especially now, what do we have? We have that strong liquidation on the M15, because at least we had a high that broke, some structure, inducing a lot of sellers into the market. We've then got a liquidation of that high into 4-hour supply. So there's a very decent possibility the M15 could switch bearish to facilitate the 4-hour pullback before continuing higher, okay? But obviously it doesn't have to happen straight away. The M15 is still bullish, so we can still look for longs until that continues, okay? And the more immediate bias for the session is we had broken the high, we had an M15 chock, but you don't have to just jump in straight away. You can see supply starting to hold a lot of momentum. So at this point here, pretty much a V shape, right? It's kind of decent to keep looking for shorts then. And then we took a trade within here, which was where I wasn't really that sure about the liquidation. It's one of those tricky ones, right? Because all it broke was that fractal high. So it's like really, I guess you got another break there as well, but they're still just fractal lows, right? It's nothing super significant. But if you are unsure and you see this like big supply coming in, right, actually broke the M1 boss there, that can give you a lot more confidence to then take this, right? I guess you could look for another C from here, right? You could look for a price to come in and give you another chock there just for a bit more confirmation, but you'd have had to wait for all the way down there at that point. So then, it's not going to happen. So that was that trade. That was a decent counter trend trade, in my opinion. Bit pretty Frankfurt, but I explain kind of the reasons when it can make sense to take those Asian session trades if you don't primarily trade Asian session. Then we came into here. Remember, this was like a similar one where you're not so sure about the liquidation because it's just a chock. Well, if you're not sure, but sometimes you want to take it, sometimes you don't, well then what does it come down to? It comes down to, where did I write it? Did I write it here? No, I think I wrote it here. Yeah, it comes down to this major key. Higher time frame narrative and POI selection is everything. Perfect lower time frame entry model and the wrong higher time frame area is worthless, okay? So if you're unsure, come back to this. This is what matters. Not the entry model per se, this is the key. So, the point I'm trying to make here is if you're unsure about that and you want to wait for a bit more, ask yourself how much you like this POI. Well, it's pro-trend. It's pretty much in the discount, but not quite. No inducement, really obvious equals behind it, and you're entering on a range rather than the refined pivot, and we're starting off with a ton of momentum. So usually the first mitigation can be a trap. That was the first mitigation there, okay? So it meets the rules. There's a trade there. Maybe that could work out on another day, but if you're unsure, there's some of the things you want to be thinking about. Is like how much do you like the POI? We then eventually did get a much more of a strong liquidation, right? That low there is going to entice a lot more buyers into the market, generating a lot more sell-side liquidity, but the supply that caused the liquidation never got flipped, right, or failed. It never failed. So then we move down lower. Then we come into the much higher probability POI. We use the liquidity from the inducement, but it never took out the supply that caused the liquidation, so nothing there. There was potentially a strong low here, but again, it was a similar one. It only caused that shock. It never really caused a convincing shift in order flow there, right? Did supply really ever fail? Not so much, but we were open to trading it. If we did get it, what caused the liquidation? This did here. Again, that never failed. So what do we need? We need more liquidity to be built. This low here broke this high, kind of another reaction there, just building a bit more sort of relatively equals, right? It's not the best, but it's better than nothing. But either way, we still had the fake break, so that's decent. Where's the supply that caused the liquidation? It's up here, and then eventually that got flipped up here. Didn't quite get tagged in. Yeah, I don't think you would have unless you really took that. So a bit of an iffy trade there, but you can see the idea play out, and then we're in the middle of no man's land towards the end of the session. So yeah, that was London. Quite an interesting session, but let's take a look at New York.